We all know Michael Burry is a big name in the investing and hedge fund space. His strategy to short the housing market was unusual, and most people at that time couldn't even understand his strategy. But once he successfully made money by shorting the housing market, everybody started looking up to him. Whatever he does now is extensively tracked by everyone, and they try to figure out his strategy and the end goal. But did Michael Burry always want to be an investor and manage a hedge fund, or did he want to do something else? Let's see the background journey of Michael Burry and how he became a hedge fund manager and ended up making millions. But before that, please subscribe to the channel to learn more about money and businesses. Most people who watched the movie have the wrong idea about Michael Burry being an honorary doctor. But the reality is that Michael Burry is a real doctor who was allowed to treat patients. Medicine and finance are completely different fields, and they both require different skill sets and knowledge bases. To become a doctor and have success in the financial field requires certain qualities and attributes, and Burry had both of them. The reason Burry had both of these attributes was because of his fake left eye. In his childhood, to save his life from cancer, doctors had to remove his left eye, and since childhood, he used to wear this fake eyeball. Because of this, in his childhood, he got bullied and ostracized by other kids from his school, so he made no friends and talked very little with other people. Even though he liked football, which is a team sport, he chose swimming as his sport as it needed no team. When he grew up, Burry faced issues talking to people in person, and everyone used to focus on his fake eye, which would make him and other people both uncomfortable. So, he spent most of his time alone. By his late 20s, he thought of himself as the type of person who didn't have friends. Burry himself says, "My nature is not to have friends, and I'm happy in my own head." Because of this, he had more trouble with small talk and faking interest in other people's concerns and hobbies. You can see this in the movie when he interviews his assistant. Since childhood, he had spent most of his time alone, and because of that, he had developed a fantastic ability to focus and learn, with or without teachers. That's why Michael Burry could switch back and forth between English and economics, and pick up enough pre-medical training on the side to get himself admitted to the best medical school. He studied medicine because it wasn't hard for him. For most people, getting into and studying medicine itself is hard, but Burry was kind of doing it for fun or a hobby. Burry had no superficial liking for a subject. Either he liked a subject and was obsessed with it, or he was not at all interested in it. There was no middle ground. All of his abilities developed because of his minimal human interaction, and the main reason for the minimum human interaction was his fake left eye. So overall, all of Michael Burry's abilities or analytical superpowers developed because of his fake left eye. Because of his immense focus, Burry was capable of doing a 14-hour shift in the hospital, and after that 14-hour shift, he used to work on other technical things he liked. Burry's super fast thinking abilities made his superiors doubt him, and they even got him treated by the psychiatrist, who misdiagnosed him as bipolar. After his medicine degree, the idea of the actual practice of medicine and treating patients bored him. When he was a kid, his father used to show him the stock charts and told him that the stock market is like gambling, and you can never trust the market. But he still had curiosity about the market and kept reading about the stock market. When he grew up, he understood that there was no logic in these charts, graphs, and stock tables. He studied various investors, such as Benjamin Graham and Warren Buffett. He figured out that to be a great investor, you can't just copy other investors. Even though he admired Warren Buffett, he understood that he couldn't be a carbon copy of him. He knew that all these great investors had their own style, and he had to have the same. He knew investing was something you had to learn how to do on your own, in your own particular way. So, the approach he took was value investing. This approach required a tireless search for companies so unfashionable or misunderstood that they could be bought for a much lower price. This value investing is what made Burry successful, and it is also mentioned in the movie that he always looks for value.
I looked for value wherever it can be found.
In the late 90s, during the dot-com bubble, one day while working at the hospital, during the break he logged into a website called techstock.com, and there he created a post or thread named Value Investing. At that time, this website was used by many real-life Silicon Valley investors as a discussion forum. Burry had already read everything he could about value investing, and by creating a post on techstock.com, he wanted to learn more about value investing from real-world investors. Initially, people on these sites didn't take him seriously in the discussion. They thought Burry was a doctor and his opinions were not useful. But because of his knowledge and understanding of the markets, eventually Burry used to dominate the discussion among other professional investors on that website. After that, some of these professional investors used to take his advice, and they would make money with it. Once he figured out he had nothing more to learn from the crowd on techstock.com, he quit the site and made his own website where he posted his stock market trades and his arguments for making those trades. He used to work 16-hour shifts at the hospital. After that, between midnight and 3 in the morning, he used to post his trades on his website. Eventually, people found his website, and they were impressed by his trades. They used to wonder, being from the medicine field, how he could make such accurate trades. This continued during the dot-com bubble as well. During the dot-com bubble, everyone was losing money, but Burry's trades were 50% higher than everyone else's. Burry couldn't see exactly who was following his website, but he could tell which domains they came from. In the beginning, his readers came from random websites. They were just random people. But pretty soon, people were coming to his site from mutual funds like Fidelity and big Wall Street investment banks like Morgan Stanley. One day, he criticized Vanguard's index funds, and soon after, he got a legal letter from Vanguard's lawyers telling him to stop. Burry then found out that serious investors were also watching his trades on his website. In short, Burry was recognizing patterns no one else on Wall Street was able to see. When his father died, he inherited some money. He closed his website, took a little more money from his family and friends, and started his own fund, Scion Capital. When he was looking for an office space for his new fund, he received a surprising phone call. The call was from a big investment fund, Gotham Capital, in New York City. Gotham was founded by a value investment guru named Joel Greenblatt. In the movie, he is shown as Lawrence Field. He told Burry that his firm was making money off his trade ideas from his websites, and they wanted Burry to continue to do so. So, Gotham Capital wanted to invest in the Scion Capital Fund. They invested $1 million for 25% ownership of his fund. That's why, in the movie, you see Lawrence asking for his money back as a partner in the firm.
Give me my fucking money back.
After that, he got another call from a firm named White Mountain. This firm was run by a person who was very close to Warren Buffett. He told Burry that they were also watching his trades and were making money from his strategies. So basically, Warren Buffett was also watching Burry to make a profit. White Mountain invested $600,000 for some percentage of Scion Capital, and they also gave $10 million for his fund. Right from the start, Scion Capital was very successful. In its first year in 2001, the S&P 500 fell 12%, but Scion was up 55%. The next year, the S&P 500 fell again by 22%, and yet Scion was up again by 16%. The next year, in 2003, the stock market finally turned around and rose 29%, but Scion Capital beat it again, and it was up by 50%. By the end of 2004, Burry was managing $600 million in the fund. Michael Burry ran the fund differently. He didn't take the typical hedge fund manager's fee of 2%, which was just a fee to collect a huge amount of money from investors. Scion Capital charged investors only on its actual expenses, and Burry charged fees only when he was capable of growing investors' money. This unusual approach to hedge funds was unheard of on Wall Street, so Burry had many investors lined up to invest in his fund, but he rejected most of them. It didn't matter whether the stock market went up or down, Michael Burry found stocks that were profitable. He used no leverage and avoided shorting stocks. This is ironic because the man who was known for making the biggest short on Wall Street initially avoided shorting the stocks. Michael Burry used to sit in his office alone and read the financial statements of the companies. He went looking for publicly available information, court rulings, deal completions, and government regulatory changes, anything that might change the value of a company. After he found the value in a company, he used to buy the stocks of that company. His aim was to focus on stocks, which everyone would think of as bad investments and would right away say no to. One such example was a company called Avanti Corporation. This company was accused of stealing from its competitor, and the executives of the company were serving jail time. Still, the company was making $100 million per year. Michael Burry started studying this company, and by the time he was done, he knew more about the Avanti Corporation than anyone else. He was able to see that even if the executives went to jail and the fines were paid, Avanti would be worth a lot more than the market then assumed. So, to make money from Avanti's stock, he had to face short-term losses as everyone was selling because of bad publicity of that company. But eventually, Avanti's stock rose, and he made millions for his investors. His investors knew this was a classic Michael Burry trade style, where the stock first goes down by 50% and then goes up by 10 times. To avoid short-term panics in the market, it was Michael Burry's policy that if you gave Scion your money to invest, you were not able to take it out for at least a year. After this, Burry focused on the housing market, and we will see the details of that in one of our next videos. If you want to learn more about the Big Short and the 2008 crisis, then check out this playlist.